This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices eased for a fourth straight session on Thursday after the minutes of a U.S. Federal Reserve meeting revealed discussions of a further tightening of interest rates if inflation remains sticky, a move that could hurt oil demand. Brent crude futures fell 46 cents, or 0.6%, to $81.44 a barrel at 0424 GMT. U.S. West Texas Intermediate crude futures were down 54 cents, or 0.7%, at $77.03. Both benchmarks fell more than 1% on Wednesday. Minutes released on Wednesday from the Federal Reserve's last policy meeting showed the U.S. central bank's response to sticky inflation would involve maintaining its policy rate for now but also reflected discussion of possible further hikes.
U.S. crude oil inventories rose unexpectedly last week due to a big adjustment for unaccounted barrels, while gasoline stockpiles fell as demand grew ahead of the summer driving season, the Energy Information Administration said on Wednesday. Crude inventories rose by 1.8 million barrels to 458.8 million barrels in the week ending May 17, the AIS said, compared with analysts' expectations in a Reuters poll for a 2.5 million barrel draw. Despite higher exports and refining rates and steady production, crude stocks grew as the EIA's adjustment number, which tracks unaccounted for crude, rose to 1.4 million barrels last week, its highest since early November.
Moving on to the top news in the energy sector.
Russia will likely open its first liquefied petroleum gas (LPG) terminal on the Pacific Ocean coast with joint investments from China by the end of 2025, two industry sources said on Wednesday. Last week, Russian direct investment fund struck an agreement with Chinese petrochemical company Highway to finance the marine terminal in Russia's Far East to ship LPG. It did not provide the timings for the project completion. The agreement, signed ahead of President Vladimir Putin's visit to China on May 16 to 17, envisages investing 7 billion rubles, $77.63 million, in the terminal with annual capacity of 1 million metric tons.
U.S. lawmakers behind a congressional probe of major oil companies on Wednesday called on the Justice Department to investigate whether the industry deceived the public about fossil fuels' impact on climate change. Two Democrats, Senator Sheldon Whitehouse and Representative Jamie Raskin, outlined the findings of a nearly 3-year investigation into big oil and urged the agency to take action in a letter to U.S. Attorney General Merrick Garland. The lawmakers accuse companies ExxonMobil, Chevron, BP and Shell, Oil and Gas Trade Group, American Petroleum Institute and Business Group, the U.S. Chamber of Commerce, of working together to mislead the public by making promises to reduce emissions while also seeking to protect oil and gas production. Next, we have the top news in metal markets. Copper prices fell on Thursday, dragged down by weak demand in top consumer China and a strong U.S. dollar following hawkish Federal Reserve minutes. 3-month copper on the London Metal Exchange was down 0.4% to $10,373 per metric ton by 0402 GMT, while the most traded July copper contract on the Shanghai Futures Exchange fell 3.4% to 83,740 yuan, $11,561.35 a ton. The losses came with profit-taking after prices hit record highs on Monday, and as some started to build short positions, traders said.
Germany's economy ministry presented on Wednesday its concept to create a market for climate-friendly products as Germany aims to become carbon neutral by 2045 and seeks ways to cut emissions in its steel, cement and chemicals industries. In addition to subsidies to help energy-intensive firms switch to green production the government launched earlier this year, Berlin wants to build demand for goods built with a lower greenhouse footprint, which are usually more expensive than those conventionally made. The concept includes industry-specific definitions of climate-friendly steel, cement, ethylene and ammonia, along with a labeling system for these definitions.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures rose on Thursday due to weakness in the Malaysian ringgit and expectations of improved demand as the tropical oil started trading at a discount to rival soft oils. The benchmark palm oil contract for August delivery on the Bursa Malaysia Derivatives Exchange was up 26 ringgit, or 0.67%, at 3,894 ringgit, $826.75, a metric ton by midday break. The sharp drop in the Malaysian ringgit is providing support to palm oil and offsetting the impact of weakness in US soy oil futures, said a Mumbai-based trader.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.